second episode on understanding liquidity. This one will be about liquidity pools, daily highs and lows. The institutions do not want you to know how the markets work. They need new dumb money coming into the markets, believing that indicators work and leaving you holding the bag. The informed traders that are in the circle know everything retail traders learn in the beginning is a lie. I'll let that sink in for a minute. Alright, let's go ahead and get into it, you guys. IPTA seeks liquidity in the form of stop losses, so daily highs and daily lows. So traders will place their stops above the daily highs and daily lows. Institutions will, large traders will. These daily highs and lows are liquidity pools. PDH is an abbreviation for previous day's high, which a lot of times price will just run the previous day's high or low and then reverse. So PDL is previous day's low, PDH is previous day's high. So as the price retraces and it starts heading back up there, we can be pretty certain that the draw on liquidity is the stops that are resting above that daily high. So after the run on the buy side liquidity and the stops that are resting above that daily high, we can expect a purge and reverse scenario. Alright, so let's go ahead and head over to the TradingView app and check out some examples from the past week. Okay, so let's look at some examples here on the daily chart. So it came down on Monday the 19th, then the following day, Tuesday, cleared out the previous day's low. Then it came up, cleared out the daily high there, cleared out the daily high there. And then it came back down on one swift move and cleared out this daily high, or this daily low. And then immediately went all the way back up, and then we'll go ahead and look at a smaller time frame. Let's go to the 1 hour chart and break this down. What happens and why it happens, and how you guys can use it in your trading. Okay, so here we have the 1 hour chart. Hope you guys watched my previous video. If you haven't, you definitely should. Explains why equal lows are so important. So we have equal lows here, and then it busts through them, clears out that liquidity because traders think double bottoms are amazing and they'll put their stops there. So we have a liquidity pool there, which is on a lower time frame, the 1 hour chart, it's equal lows, and on the daily chart, it's a daily low. So what makes daily lows, especially the previous one, that it often will get ran and then continue in the direction it was going previous to the run on liquidity, is that we as retail traders have been taught that daily lows are a good spot to put your stops, and that's just factually not true. Okay, so it drops down, clears out liquidity, get immediate reaction Tuesday morning, and then rallies all the way up, clears out these equal highs, hits a breaker over here, or mitigation block, and then just dumps. If I thought it was bullish, it was a perfect swing low. You got, that's the daily low there. That's the daily low there. And then that was Tuesday morning's daily low. So Monday night, Tuesday morning. Okay. So there's something I always put on my charts as daily lows. Like I'll mark them out just like this. And I'll look for them as targets. They make good targets. And they also make really good reversal points. So as you've seen, if you were to, after this daily low is cleared, if you started looking the next morning right here, this was a beautiful trade at the New York opening. Okay, so let's go ahead and look at this one. So it ran out the sell side liquidity and then immediately reversed up. After price came down and ran, this is a perfect purge and revert scenario. That their stops built up here, it's a trap. The market's going to go up. People that bought put sell orders here. And then it came down, cleared it out. The trap has been set, and now the liquidity has been cleared, so now it can go up. And the thing about purge and revert is you see it all the time. Like this is a good example right here. It's so powerful if you just look for these concepts. Like right here, liquidity has been purged, and now price reverts either to clear out the other side of liquidity or to fill in an imbalance. As retail traders, we're always taught that You want to be buying breakouts, and that's literally the worst thing you can do. Like, I mean, as a breakout trader, I don't know how they even do it. Just good risk management, I guess. Comes up, takes the liquidity that's built up here, immediately runs down, runs the other side of liquidity, grabs the stops, and then continues. So this is like inducement. Juice traders to sell, thinking who knows what their bias is and what they're actually targeting, but it induced them to sell, got them in the market, built up the stops, rallied up, take it out, grabbed their all their stops, and then ran the other side. So I look at daily highs and daily lows as this purge and revert kind of thing. Like just right here, it's in all the charts you look at, guys. Like you can't deny this concept. Like I don't care if you don't believe in ICT's concepts and you don't believe that there is an algorithm running the market. I do because I see it every day. Like at first when I first watched his videos, I was like, "What is this dude talking about? There's no way that an algorithm runs the market and is able to control every single thing." But once you start looking at these, man, you can't deny it that there's an algorithm that is seeking and creating liquidity. Who for? I would assume it's for institutional traders, large traders. Who knows who actually owns and runs the algorithm, but I don't care because all I know is I like this algorithm because I'm able to understand it. So, as smart money traders, our goal is to understand what this algorithm's goal is doing for the day. Is it creating liquidity or is it seeking it? So, it's really choppy days that are stuck in like a consolidation or a broadening formation. That's a create liquidity day. So 2 weeks ago, we had a 2 week. Let's go daily chart. I'll show you guys. We had a whole 2 weeks where the market was stuck in a broadening formation. And I posted this on Twitter and I had some dude arguing with me about it, like that this isn't a broadening formation. It's not creating liquidity. Like you can't. Like what is it? What? How can you even deny it? Like if you check out the strat, which I found the strat right. I was studying it for like 6 months before I found ICT. Can't deny that this isn't a broadening formation. Like it's perfect. Like it's perfect. It's on the daily chart. Like perfect touch there. Perfect. 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 That one's a little short, but you could go the closes and then it's perfect too. But it's inducing liquidity. Runs out the high. Puts in a high right here. So this is why you guys need to pay attention to daily chart. If you're zoomed in on a small time frame and you don't realize that we're about to run a daily high or daily low, then you're gonna get busted up, guys. Like I see a lot of people struggling. I think it's because they're not paying attention to the daily chart. Video went over daily lows and daily highs, previous days and previous days low. So I hope you guys are understanding that liquidity, that's what the market's seeking. And then now you can add in that it's seeking liquidity and after the run on liquidity, not always, but most of the time, you're going to get a purge and revert scenario. So I'm not saying that that's going to offer you a swing trade or anything, but it does offer you a very good scalping situation. So that's why it's very beneficial to put it on your charts. All you got to do on TradingView is just smack it on there. That's what I do. I'll just smack it on there, and then that way, if I'm on a smaller time frame, I can see it happening. I do it for equal lows and daily highs and lows, and I also do it for sessions. So the overnight high, the overnight low, and stuff like that. Asia session. So I don't follow ICT's kill zones to the exact. For me, it's Asia session, high and low, pretty much the whole overnight. So I'm in the west coast of America, so when I wake up and start analyzing the market, it's usually like 5 a.m. So that's my start of the pre opening. So you got the Asia session from 1800 on New York time all the way until 2 a.m. I mark those highs and lows off. So as far as liquidity goes, I hope you guys are understanding that the stops are above the highs and lows because retail and some institutions believe that these are good spots to be putting their stop loss orders at, and the market is seeking those stop loss orders. So I'm going to go ahead and do a daily analysis for you guys going forward. Okay, so the first thing I look for is equal lows and equal highs on the daily chart. So immediately what stands out to me is these equal lows right here. I'm assuming there's a lot of stops underneath those. Okay, and the next thing I see right here is there's equal highs right here. And then like later I'll post something on Twitter and I'll put all the abbreviations on. Alright, so equal lows there. We have the equal highs and equal lows. Then I look for fair value gaps. So immediately this really large one pops out to me. Let's go to mark that. That's why TradingView, if you don't have TradingView, you need to get it. It's not very expensive. You can also pay $4 for the futures CME. So altogether 14 bucks a month. I think it's really good providing what this platform offers. So okay, I see that fair value gap there, and then I start looking for volume imbalances. So we'll touch on this later after this series, which I think today I'm done with the liquidity. I just wanted you guys to understand the major ones that really will affect your trading. Okay, so now we got the fair value gap on there. This one's closed all the way. The next thing I look for is breakers and such. So right here, the last down close candle before the up move, that would be a breaker. So the up move, for it to be a breaker, has to run stops. If it doesn't run any highs, then it's just a mitigation block. So this is a breaker. So you can mark them off. Like I usually just use a line, like at the bottom of the close of the candle, so my chart doesn't get too messy. Okay, so we have fair value gap, volume imbalance, which I'm gonna thin this out a lot. So the market came up, cleared out the highs, dropped down, created this fair value gap, cleared out the equal lows that were here. Next day opened up, drove up, hit the breaker there. See that? Perfectly. Like, how can you deny how can you deny ICT concepts? Let me show you guys this. Like, let's look at this. Boom. Okay. So here's the breaker, right? Here, I'll even do this so you guys can see it better. So the close of the candle, for breakers you use the close of the candle. Look at this. Like, how can you deny it? It's to the tick. Almost to the tick on the daily chart. Like, what's it? Not even like, come on. I mean, you cannot deny these concepts. Like, you can if you're ignorant and you don't know them. Or not, ignorant's the wrong word. You can if you don't understand them. But once you have an understanding of it, like, I get mad. I try not to get mad at people on Twitter when they're arguing with me about the CT concepts because they don't know, but I just tell them just watch and I'll show you, man. Just give me a chance and I'll show you what's up. Okay, I had to pause it there and get everything realigned. So now that I have the breaker there, the fact is if it comes up there, it'll clear out that daily high there and then it will come at least halfway. Okay, and then we have the volume imbalance. Let's check out this down close candle here. There's not two down close candles like to ICT's definition of order block, but to me it's an order block. It acted as one. That way it now determines an order block by measuring that 50% of it, the threshold it bounced off there. So equal highs, volume imbalance, and fair value gap left. And below those, we have the equal highs, right? So the clues are leading up bullish. The only thing is this equal lows that are down here that worry me a little bit. But I think the bounce off this order block has now confirmed that short term the bias is bullish. So now that these concepts, the equal lows, equal highs, daily highs, I'm hoping this will help you guys get where you're needing to be, because these concepts, they're real. There is an algorithm. You just need to trust it and stop with the retail logic that you learned in the past. I know it's hard to break. It took me a while to break it, but it is possible to break it, and you really have to. You have to stop using indicators. So I've traded every single trading strategy you can think of, from EMAs to volume profile, market profile, stochastic crosses, supply and demand trading, all of it. I never found consistency with it because the way my mind works is I need to know why. If I don't know why, then it's hard for me to follow along with it, and I'll just keep violating things. Like if the EMA crosses, I don't know the math behind EMAs and why they cross and how they work. I just don't. But this price action, I can understand it. It makes sense to me. And if you apply these concepts and you're patient and you understand and start learning, don't overwhelm yourself digging too deep into these concepts. Just get one concept at a time and then apply that in your trading until you master it. You need to spend, I'm talking at least 2 to 3 hours a night, annotating your charts on every time frame. Start on the daily chart, map it out like we just did here. It doesn't even mean anything crazy. Map out what you see. Go down to the 4 hour, do the same thing. Mark out the daily highs, mark out the equal highs, mark out the fair value gaps, mark out the volume imbalances, and then go back through the day and see how price reacted at these levels. And you need to do that all the way down to your entry time frame. So if you trade on the 1 minute, start on the daily chart and work your way back all the way 4 hour, 1 hour. Then go to the 15-minute chart and then go to your entry time frame. That should take you around 2 to 3 hours. Take a screenshot of it after you're done and save it. And once you do that, it's going to act in your mind as that you've already done it. So then when you're trading, when the market is open, it's going to be like second nature. A lot of times when I do my analysis in the morning, as soon as I look at it, I'm like, oh, I'm bullish, but I don't really know why. It's because my mind's picking up all this stuff that I've learned. And once you do that, these concepts can really change your life, guys. I'm telling you, man. Once I found ICT, my life changed. Immediately, my trading started a drastic change. I was able to get funded. And then once I got funded, I still struggled a little bit. I would pass the evals, but then I would blow the account. And I did that for about a couple months. And then finally, I got a UProfit account. And I was able to start getting payouts. And then once that money hit my bank account and it became real in my head, then it was off to the races. Like I started passing eval after eval and started stacking up these accounts, and then I was able to get out of the rat race. And that's what I want you guys to be able to get out of the rat race. I don't want you guys to have to work a 9 to 5. It sucks. And then once you get funded and you start getting payouts, you can start using that money to start another business if you like. And then you can just kind of build an empire around trading. And then so I recommend for funding, I recommend futures funding. For evaluations is futures funding right now. You can get a 50K account for $19. So if you guys are interested in futures funding, I'll go ahead and leave the link to my Twitter in the description and the link to Verified Trader Funding's website, which I'm a co-owner of that. I also am doing the YouTube videos for that. So I hope this video helped you guys. Go ahead and like and subscribe, and the next one should be coming out in about a week or so. I'm going to try to release one of these every week. So you guys, good luck trading. I hope this helped.